Good day, you're watching Businessworld Live. I'm Danny Laurel.
And I'm Jess De Los Santos. Here are today's top stories. With the Bangko Sentral continuing to tighten monetary policy, the exit of hot money slowed down in July.
The Trade Department admits that retail prices of refined sugar remain above 100 pesos per kilo.
Is the tourism sector on its way to full recovery now that domestic air travel has surpassed its figures from the past 2 years?
And the reality of flying in an electric taxi is closer than you think.
Let's begin our broadcast with the exit of short-term foreign investments easing in July. Hot money net outflows amounted to $103 million last month, 70% lower than the $342 million recorded in June. Foreign investments registered with the Bangko Sentral through authorized agent banks are known as hot money due to the ease of their entry to and exit from financial markets. Typically, investors want to secure the best short-term rates possible. Economists said the exit of foreign funds was largely due to rate hikes by the U.S. Federal Reserve as well as the tightening by the Bangko Sentral.
Now, the Trade Department says sugar prices at the retail level are still hitting over 100 pesos per kilogram. In a Laging Handa briefing, DTI Undersecretary Ruth Castelo says retail prices of sugar remain, quote, expensive at around 100 to 105 pesos per kilo. Now, with this, Castelo reminds consumers that they have the option to shop for sugar in the 3 large supermarkets participating in a government scheme to offer sugar for 70 pesos per kilo. Castelo also invited smaller supermarket groups to join the agreement, saying that they will be included in the department's promotion efforts. However, the official clarifies that the government will not be providing help or incentives for those who choose to do so.
They are most welcome to join us kung kaya nila na makapagbenta rin ng 70 pesos per kilo na white refined sugar, pero wala namang benepisyo ito or tulong na binibigay ang government dun sa 3 retail chains na nabanggit. Yung 70 pesos, it's part of parang corporate social responsibility na din nila.
Domestic air travel has soared to new heights so far this year, already surpassing its numbers from the past 2 years. Is this a sign that the tourism industry is well on its way to recovery? Let's get insights from Tourism Congress of the Philippines President Jose Clemente III. Jojo, good day. Thank you for joining us.
Good morning, Danny, Jess.
All right, so domestic flight traffic already exceeded 2021 statistics. Same for international travel. When do we expect this to peak this year? And can the same be said for other segments of the tourism industry? Can you confidently say the sector is already on bounce back mode?
Well, cautiously, I'll say that we are on bounce back mode. Our statistics are showing that we're recovering maybe a little bit faster than we expected, which is actually a good development. Through the first week of August, we already have 1.1 million foreign arrivals. And my initial projection was only around 1 million to 1.2 by the end of this year. So we're actually getting more arrivals at a faster rate than initially anticipated. And looking forward, no, you were asking about when will it peak? Definitely starting November, December, the traditional winter months, the tourists, especially from the long-haul markets of Europe, North America, will be starting to arrive. And this is usually the peak season for that part of the world to come to the Philippines.
All right. Sir, to what extent is this backlog travel, revenge travel, or normalized pre-pandemic ways of traveling? And are there specific travel trends that you are now observing when it comes to the tourism industry?
Okay. As far as what we're looking at, as far as tourism is concerned, 2 things, no? We're looking at the prices of petroleum products because it affects travel, not only jet fuel, but also the transportation costs in our local destinations. So that tends to bring up the price of travel. The people traveling right now are probably people who had money saved up through the pandemic, and that's why they're traveling. They have the resources. What we have to look at now is moving forward to 2023, 2024, how those factors will play into to travel patterns. Will the airfares get too high that it will preclude people from traveling, or will it be stable enough that we can maintain the growth that we're having right now? Then secondly, of course, we're still looking at COVID-19. It's still there, but what we found out is that people are more resilient with regard to that. They really want to travel, and they feel as long as they take the proper precautions, and then the destination they're going observes all the health protocols, and they feel safe enough. So we haven't really seen any drop-offs, despite of the Philippines being placed on level 3 by the CDC about a week or so ago. So yon, yeah.
Sir, can you say that we are becoming less reliant on the biggest countries that used to, of course, be our main tourism markets, China, even Japan, and now shifting towards domestic travel? And with these figures, can we say that the domestic travel economy is actually absorbing the losses from these big international players?
Okay, that's a good question, Danny. There's a little bit of truth in that, no. In the statistics that we had prior to the pandemic, of the almost 3 trillion pesos that tourism generated in 2019, almost 2 trillion or 2 trillion of that was generated from domestic travel. So the domestic travel is really is the strongest segment as far as travel is concerned. So, and it is accepted, no, by the UNWTO and by most countries that in the short to the medium term, domestic travel will be the most reliable source of traffic for tourists in any country. As far as the international markets are concerned, it's not that we're not being less reliant on China or Japan. It's just that we have to do with what we have right now, because those countries still have issues to deal with as far as COVID is concerned. So if China and Japan opened earlier this year, instead of doing 1.1 by August, we would probably be closer to 2-3 million by now. So it's just a matter of waiting. Once those countries reopen, I think we'll stick to the projection that we will start to get the pre-pandemic numbers by 2024.
Now, which other markets do you think are filling those gaps, at least being left at the moment by China and Japan? And in terms of destinations here, which locations at least are buoying those numbers for us?
As far as markets, Jess, we were very pleasantly surprised that it's really the long haul market that's keeping us up. No, this would be Europe, this would be North America, to a certain extent, Australia. South Korea also reopened, so we're getting a lot of them coming in now. So those are the markets that they're looking at. It won't replace the two big markets that we have in China and Japan, but they're coming in numbers. Again, no, I keep saying the word unexpected, because we were the first country in the ASEAN to open up almost totally. So I think that played a role in attracting people to come here. Your second question, sorry.
Regarding locations, which do you think at least locations here are pushing demand?
Okay. As far as locations are concerned, of course, you still have your favorites like Boracay, El Nido, Bohol, Cebu. But we're picking up tourists that are going to other destinations now, like Dumaguete, Siquijor, up north, of course, Ilocos. And what we're finding out now is that they are still looking for new places to visit in the Philippines. So I think it's about time for us to really start developing more of our 7,000 islands to have more offerings for tourists. And that also gives repeaters a reason to come back.
Is there at least a particular location you're eyeing here that you think would somehow at least help further boost our numbers, apart from the staples, of course?
Yeah, well, you have Bicol, for instance. No? It's always been an underrated destination. Maybe it gets a bad rap because it's in the path of typhoons and storms. But Bicol is rich in tourism activities. Other islands like Romblon, Masbate, things like that. No, maybe we just aren't featuring them enough as a matter of accessibility and interconnectivity with the other destinations. But once those issues are addressed, it's quite easy to bring people. It would be quite easy to use them to attract tourists to come.
Now, at the same time, Jojo, of course, our recovery will be compared to the rest of the region as well as other regions. There are studies that point, that tourism recovery in Asia Pacific will be slower compared to other markets. Question now is, how is our recovery faring compared to our neighbors, the likes of Thailand, Indonesia, and Vietnam?
Um, uh, just in a way, I see that sometimes as comparing apples and oranges. We all have our different strengths as far as recovering is concerned. I think what you'll find out now is that the Philippines, because of our infrastructure, because of our facilities, we may not get the same number of tourists coming in. Like, let's say Thailand is doing 10, we're doing 1 million. Um, it's not really a fair comparison. What we will look at there is expenditures per tourist. How much are they spending here compared to the other destinations? Uh, if you look at those indicators, I think we're doing a pretty good job, no? Pound for pound with the other ASEAN destinations. Plus, the fact that I think now in ASEAN, I think we have one of the easiest guidelines coming in. No? We did away already with the testing upon arrival, quarantine, all of those things. So we remain to be an attractive destination as far as that is concerned.
Sir, what is the outlook now, given, like you mentioned, reopening of the economy, but on the downside, the prices of fuel continuing to be elevated and putting a
Mm,
dent in consumers' pockets, people saving up
mm,
because mahal na yung basic goods. How can we
mm.
balance that out? Are the risks tilted to the upside still?
I think it's still tilted towards the upside. There was a study done by Amadeus, no, one of the computer providers, I mean the systems providers of the tourism industry. And they found out that of 4,500 respondents, about 75% would still want to spend their disposable income on international travel. So that tells you that, they really want to go. But, tama ka, Danny, no? Your question is, where do we find the balance and threshold of them traveling to Asia or within Europe or within the US because of the price of traveling? And airfare and the accommodations are the two biggest components of travel. As far as addressing or continuing the upswing that we're experiencing right now, I think it's important for us, the stakeholders, to also take a look and not just because we're making money now that or we're thinking now of increasing rates or increasing prices. No, there are still mitigating factors. Again, I'll say about the fuel prices, about COVID, and all of these things. So we can take cautious steps moving forward. We've only had since February to see trends in. And we're lucky that on a monthly basis, we have positive growth as far as arrivals are concerned. We want to keep that going, but at the same time, keeping an eye on external factors that might affect the recovery.
Sir, as president of the Tourism Congress, what programs are you putting in place in the short term to lure back travelers, or at least even domestic travelers around the country?
Well, what we've advocated, no, especially in the meeting with Secretary Frasco that we had, uh, is just continue the marketing to our international markets. Kasi the DOTs did such a good job during the pandemic of keeping the Philippines in the consciousness of our foreign markets, to the extent that when we reopened in Feb 10, or even when we just announced that we were reopening Feb 10, the inquiries started to come in na like flood. And then when Feb 10 came, we had so many people coming in kagad on the first day of arrival. So that means to say we were able to do a good job of saying that, hey, the Philippines, we're here when you open, you're welcome when we open. Secondly, of course, we're still talking about things like simplifying the entry procedures, like the One Health Pass. Coming up with an integrated system wherein you don't need to fill out the other contact tracing apps anymore because some LGUs are still requiring it. And some of the contact tracing apps that we have, like for SPAS, for example, is if you look at it, it's not friendly to tourists coming in because there are questions there that are not relevant to them. So, in a way, the passengers see it as a hassle, whereas in other countries, the contact tracing apps or the registration is much easier. Small things like that can actually make an impact as to how or why they will decide to visit your country.
All right, and of course, ang ganda ng Pilipinas, there's not much marketing that needs to
Oh
be
yeah,
done to
yeah,
lure tourists. If we
yeah,
have the money, people will
yeah,
be coming. So thank
yeah.
you so much for all those insights, Jose Clemente, the third president of the Tourism Congress of the Philippines.
Thank you, Danny. Just good morning to everyone.
Now let's pause for a quick break, but coming right up after that. The month is yet to end, but the Customs Bureau says it has already exceeded collection targets for August. More of that and other stories when Business World Live returns. Stay with us. You're still watching Business World Live here on One News. I'm Jess De Los Santos.
And I'm Danny Laurel.
Though Christmas is still 4 months away, the DTI is already advising consumers to start buying Noche Buena items as early as now. Trade Undersecretary Ruth Castello explains that consumers can save up more if they buy some of their Noche Buena items this early ahead of the expected price movements. She notes that prices of these commodities are expected to start increasing during the so-called Burr months. The DTI will release a price bulletin by the last week of October or first week of November to guide consumers on prices of items commonly bought for Christmas celebrations.
Maglalabas tayo ng Noche Buena Bulletin, siguro mga last week of October or early November, para magabayan ang mga mamimili kung magkano lang talaga ang dapat na presyong binibili nila para sa panghanda sa Noche Buena. Ang advice natin sa consumers, marami pong mga Christmas products na hindi naman kaagad-agad nag-e-expire. So sa panahon na ito, kung kaya rin lang natin na mag-ipon na or mag-stock na ng mga ganitong produkto, pwedeng na tayong mamili habang hindi pa naggumagalaw ang presyo.
The Customs Bureau has exceeded its August collection target by 2.8%, with the month not even over yet. Customs Commissioner Filemon Ruiz says revenues have reached 60.5 billion pesos, surpassing their August target by over 1.6 billion pesos. This comes after a record single-month collection of more than 84 billion pesos in July. From January to August 23, the Bureau has collected 541 billion pesos in revenues out of the 733 billion pesos they were tasked to collect this year.
The Employers Confederation of the Philippines, or ECOP, urges President Bongbong Marcos to improve the business environment in the country. The group said Marcos Jr. should focus on boosting investments, addressing job skills mismatch, and protecting employers' rights to manage their workers. Additionally, the president is urged to help improve productivity by supporting alternative and flexible work arrangements. ECOP also said the government should take the lead in massive upskilling and reskilling of workers, as well as creating green jobs.
Fitch Ratings says the country's big banks will continue to see improved profitability for the rest of the year. This on the back of wider lending margins, despite credit growth being expected to taper in the second half amid the inflation and the 175 basis point increase in policy rates. But Fitch says banks' interest margins and profits have yet to reflect most of the central bank's rate increases as it began to tighten only in May.
The SEC warns the public to stop investing into unauthorized securities sellers. Now, in an advisory, the Commission said that casino and cryptocurrency-related company called the Peak Finance Consultancy Services, as well as ASJ Forex Global, are not registered with the regulator. Thus, they are not allowed to solicit investments from the public. The SEC said ASJ Forex claims to be one of the leading online brokers offering Forex and contracts to more than 5 million clients worldwide, but the Commission explained it does not allow the registration of Forex in the nature of highly volatile and risky derivatives like futures contracts.
How would you like to beat the traffic by riding an electric taxi that can fly? Well, we are actually closer to reaching this reality than you think, Anurag Kotoki explains in this report courtesy of Bloomberg.
If you had the option of skipping traffic while coming from point A to B, would you take it? What if it was in the sky? Electric flying taxis are a lot closer to reality than what we think. But the big question is, how will people perceive these flying objects? And that is why Volocopter is showcasing its aircraft here in Singapore.
The Volocity is a fully electric aircraft which is designed for the inner city mission. It caters for the highest safety, for low noise, and for a fully electric flight.
One big obstacle is that not a single electric flying taxi has regulatory approvals in place. Companies like Volocopter do believe that they'll get it pretty soon enough, just in time for the 2024 Paris Olympics. But regulators will take their time to ensure these flying vehicles are actually safe enough.
We have 18 fully electric motors, and if we lose one or two motors or if they are not working, we can still safely perform our mission.
Airlines have an ambitious target of turning carbon neutral by 2050. While electric flying taxis are not expected to replace Airbus A320s or Boeing 737s in the near term, this is definitely a first step in that direction.
We are sitting inside the Volocity, and as you can see, it's very comfortable. You have a lot of leg space, which you normally don't have at a conventional helicopter. What you also can see, it's a two-seater, and this is the autonomous version. In the starting configuration, we will have a pilot sitting here and a passenger. And in the autonomy version, you don't need that anymore.
The big question is, how much are these things going to cost? Volocopter says it will be 40% cheaper than helicopters to begin with, and eventually it will be at par with premium taxis. That means anybody who can afford a taxi can afford a flying taxi. This is how we move. I am Anurag Kotoki. For more stories like this, please follow us on your favorite platforms.
All right, flying taxis or cable cars, take your pick. And those are the biggest stories on the economic and corporate front today. I'm Jesse De Los Santos.
And I'm Danny Laurel. We are One News, all sides, all the time. But don't go away. We'll give you the latest on the local boards and Businessworld Live returns. Stay with us.
And you're still watching Business World Live. Now, Dan, we are seeing more confidence in the domestic and global markets at the home stretch of the ghost month. What's the situation this last trading day of the week?
All right, Jess. So not too bad. Like you mentioned, ghost month almost over. That's until August 29. And if you could see on my terminal here, we're actually making it out of the woods quite well. You know, at the beginning of the month, we were actually below 6,300 levels, and we've actually risen 6.3% in the span of 1 month. Now, like you mentioned, quite some optimism going on here. I'm going to pull out the chart so you can see which movers are moving this morning. But yesterday, just to say that a lot of the restaurant operators, the mall operators were rallying and happy on the back of a Collier's report saying that, guess what, 72 to 75% na ang foot traffic in the malls compared to the pre-pandemic levels, and that might actually bring increase in mall space, commercial space requirements from this year. So quite some good news there. If you feel that there's traffic, if you feel na maraming tao sa malls, that's actually something that is a real happening right now. 70 to 75% just of pre-pandemic levels.
Right, Dan, and Dennis Ui's empire is holding on at the cost of its crown jewels. What's happening to the so-called man with a golden touch? Is he still as golden?
Okay, medyo mahirap, but at least they're admitting that they are having some difficulties. I'm going to be pulling out some charts so you can see how those companies are doing. Now, the main issue here is they need to pay off quite some debt, particularly the debt that they got for Dito Telecom. Just to put that into perspective, $1 billion in debt for Dito Telecom from Chinese banks. They reported in 2020 for Udena a debt of 180 billion pesos. I mean, can you imagine having debts of 180 billion pesos? So they do need to pay that out, and they're now considering having to sell the crown jewels. They did mention, they want to not try to have to divest Chelsea and Phoenix Petroleum, but they are open to offers. So recall that they received in July a notice of default from creditors. So the president and CEO Escalona did say it's a misunderstanding. Creditors now have been supportive. They've been refinancing the loans, but of course they've also already sold to Razon, the casino share. They're in the process of selling Malampaya as well. Chelsea has sold to Go, and Dennis Uy has said, we are wounded, of course, who else is not? We're making it right, righting the ship. Now let's take a look at, on the back of that, how Chelsea Logistics has been going. It's down by a hefty 4 7/10% in this trading day on the back of possibility of that being sold. You've got Phoenix Petroleum rather flattish here at the open. And finally, taking a look at Dito Telecom, which has seen such major swings since, of course, it became the so-called third telco player. But today, it's gaining by 0.3%.
All right, only time will tell if indeed they can make things right, and that's it for today, August 26, 2022. Join us again tomorrow at exactly 9:30 a.m. Sorry, that's Monday. Catch us again Monday. You can also catch us at Signal Play Register for your free account now at www.signalplay.com and stream One News Live anytime, anywhere. I'm Jess De Los Santos.
And I'm Danny Laurel. Mask on, wash hands, stay safe Philippines. Have a restful weekend. We are One News. All sides open.